Hey, how you doing? This is Josh. A little video here on life insurance as an investment. Just kind of wanted to talk about what life insurance is, how it works as an investment, and what kind of things you can expect from it. Um, it's kind of my little disclaimer. Look, I know this isn't for everyone. Until you understand it, it's really hard to make a decision. So hopefully by the end of this video, you'll have a good idea of what this is and if it's something that might fit you and what you're trying to accomplish. So let's just kind of jump into this. Now, most of the time, when you start talking about life insurance as an investment, you'll hear people talk about term is better, term is better. Well, this isn't an insurance conversation. I'm not trying to talk about insurance here. The insurance is just a byproduct here. What we're focused on here is the investment portion. How is this an investment? What kind of returns can you expect? And how can you use this in your or with your current strategy? So, talking about insurance, it's kind of futile here. It doesn't matter. It doesn't apply. We're not trying to compare this to insurance. We're talking about investments. Now, the primary piece of all this is what we call the cash value. Okay? The cash value is what matters. That's our money. That's our growth. That's what we're experiencing inside of our life insurance policy is this growth in the form of cash value. Okay? Now it's important to know if you don't know anything about life insurance and how it works, cash value is what we can access. It's also what we can take out at any point in time. So we can always liquidate our policies and take the money out and do whatever we want from that point. So these are easy to get in, they're easy to get out of. It's not something we're tied down to for the rest of our lives if we don't want to be. The cash is all that we care about. There is insurance that will be attached to this. It's a byproduct, but what we really care about is the cash value, and how much growth we have inside of our policy. Okay, so hopefully that makes sense. So that's what I'm going to be focusing on now. Historically, what kind of rates of return have we seen in these kind of things? Now, prior to about 10, 15 years ago, life insurance policies weren't being stacked for the cash value. Today, we can actually put money in and pack it into the cash value so that over time we're going to see more growth. But before, like I said, the late 80s, maybe even mid 90s, people weren't really utilizing this strategy of packing cash in. So we don't really have a lot of data before then. But we can still get an idea by looking at other whole life insurance policies of what kind of growth we can expect for the future, what kind of growth they've had. So here's an example, 28 years worth of information from 1981 to 2008 on a 50-year-old who bought a policy in 1981, which was a 10 pay, meaning they put in money for 10 years. So what kind of growth did they have inside of their whole life insurance policy? Well, there's two columns here. Okay, there's illustrated and actual. Illustrated just means what did the life insurance company provide to this client before they bought the policy, meaning what did they say was a likely going to happen. All the life insurance company does is project from today forward. This wasn't a projection based on history or anything like that, but they projected a 4.23% rate of return for this particular man. And in those 28 years, his actual rate of return was 6.52%. Now, there's a few things that go into this return that actually butters it up, makes it a little bit better, and we'll get into those advantages soon. But just so we're aware and we're all on the same page, 6.52 was the internal rate of return of this policy. That's probably a good place to set our sights and to use that number for the rest of our conversation here. There is also a death benefit here, and we see if this man was to die in 2008, his family would have received the equivalent of a 7.58% rate of return on his money in total death benefit. Okay? Now, so let's just kind of stick to that 6.52% for the rest of this conversation, and we'll use that as the growth number on life insurance for historical. Okay? Now, the real issue that we get into when we're talking about life insurance and comparing it to other types of investments, like let's say stocks, is the fact that life insurance is nothing like stocks. And what do I mean by that? Well, there's really two sides of the fence here, okay? There's volatile, risky investments that have the potential for high growth and also have the potential for high loss over on one side. And then we have safe, predictable, accessible, for the most part, assets over here on the other side. So over here on the risky side, we have stocks, we have real estate, business opportunities, mutual funds. We have, any kind of investment you can think of is going to go over here, basically on the risk side. Whereas life insurance, it doesn't fall under this risky investment. It's something that has innate safety inside of it and accessibility. And so it's going to go on the side over here with a bank account, with CDs, money markets, those kind of investments. Now, when we compare life insurance at 6.5% over here and compare it with any of these safe investments, it's going to blow them all out of the water. Okay, so as a safe investment, life insurance will always reign supreme. And I think that's something that people miss out on, is they're comparing life insurance with stocks, with bonds, with all these other risky types of investments, where it isn't. Life insurance is actually a great hub for our money, meaning we can earn this 6.5%. We can take that money and put it into our risky investments. And then as those grow, we can take that money and put it back into our life insurance policy and do it all again. So how does that affect our investing mentality? Well, I always like to look at life insurance as a benchmark. What I mean by that is, what I mean by that is life insurance is a great place to start to earn some capital, and then we can use that earning to reflect what we want to go for in the future. So let me start here in explaining this benchmark by covering one of the most important benefits over here of life insurance. Okay? Life insurance not only has the competitive growth that we're talking about, but that growth is also tax-free. What I mean is, as long as we set this policy up correctly and we treat it right, we won't pay any taxes on the growth inside of our policy. Now, this is post-tax money, meaning it's not tax deferred. We pay taxes on our capital before we put it into a life insurance policy. But as long as we treat it right, our growth inside the policy will be tax-free, and when we die, our death benefit will transfer with no tax. No income tax, I should say. There is estate taxes that we need to account for and plan for if you're going to run into that issue. But so why does this matter? Well, when we're talking about the benchmark, it does matter, because when making a comparison between life insurance at 6.5%, which is tax-free, what's our equivalent? So if we're in a tax-free and we're going to move to a taxable account, what's the equivalent? Well, 6.5 is probably more the equivalent of 7.5 to 8% in a taxable environment. Okay, hopefully that makes sense. What I'm saying, I'm just trying to give us a benchmark. So life insurance, if we can say, hey, life insurance is give us a safe growth of the equivalent of 7.5 to 8%, well, I can guarantee you that's going to change your mentality about what else you invest in. Because now, if you're earning 7 if you're earning 7.5 to 8% in stocks with the risk of stocks, well, that becomes kind of a dumb thing to do, because I can earn that same equivalent in my life insurance policy without the risk. So I wouldn't take money out of my life insurance policy to invest it in an 8% stock. That's not worth it to me. So when it comes to investing in stocks, real estate, businesses, I need to probably earn 10 to 12% at least on my money in a taxable environment to make it worth it for me to take money out of my life insurance policy and invest into this investment. Then as I make money in my investment over here, I can take the earnings and replenish the money I took out of my life insurance policy, and then I'm ready to do that all again when another opportunity comes up. It's all about opportunities and having that benchmark. So life insurance provides me a safe place to earn some capital, and then when I have better investments that I can make, I take my money out of my life insurance. And that liquidity is so important to this, or it wouldn't work. As an investor myself and somebody who wants to continue to invest, I put money in my life insurance policies so that I can then make those investments in the future. When I find them, I've analyzed them and I know they make sense and they're safe enough for me to take that risk, if that makes sense. So that's why life insurance really lies over here on this safe side, because life insurance is, and that's why I use life insurance, because if I put my money in a bank account at 1%, so that I can then take my money out of my bank account when I have good investments, well, I'm losing money whenever my money is in my bank account because I could be earning more. And that's why life insurance becomes such a good alternative for real estate investors and business owners, because you can put your money in your life insurance policy, access it when you want, put it into your business or real estate venture, and then put it back into your life insurance policy and continue to do that. There's actually some added tax advantages that come with that scenario. But this gives you a good idea of why life insurance becomes the best safe place to put money. So let's go back to life insurance benefits. So we talked about how it has competitive growth. Like we said, 6.5% over the last 28 years. It's tax-free growth, post-tax money. Death benefit's going to transfer. So we can basically avoid taxes for our entire lives and never pay taxes on our growth in a life insurance policy on this 6.5. Okay. On top of that, we have the accessibility or liquidity. We can always get our cash value whenever we want. There's a few different ways we can also do that, depending on what we're trying to accomplish. Life insurance offers us this benchmark, meaning kind of a minimal rate of return that we're going to earn, so that we can find investments that make sense and we're not taking risk to get such a low rate of return, like 7 or 8%. So that's a couple of the benefits here. Now, the other benefit on top of all this is the death benefit. Okay? Like I said, this isn't an insurance conversation. The insurance itself is a byproduct of all this, but let's look at this. This guy over here who bought this life insurance policy, by the time he was 60 years old, let's say, he's got $350,000 of death benefit. Just by investing this money into his life insurance policy, into a whole life policy, he's already got enough death benefit to probably cover half or all of his term cost. So he's now investing money in life insurance, and he doesn't have to pay for term insurance. So life insurance can, replace your term insurance costs. And that's just an added benefit. Like I said, that's not our purpose here. We're not trying to get a death benefit, but it's a nice side benefit to all this. So that just kind of gives us an idea of what we can expect from a life insurance policy. where we're going, and why life insurance can be such a great benefit. Every individual situation is going to be different, but at the same time, if you're using a bank account for any kind of funding, if you store money and save it up to make purchases, or at the same time, if you're investing in stocks and mutual funds and in other types of investments and you're only earning, 5, 6, 7% and you're taking 100% risk, life insurance might be a much better place to look at. So if you want to see some personalized illustrations or you want to see more in-depth information, feel free to email me or contact us over here, and we'd be happy to help you out. All right.